Uranium's been in a bull run since 2020. I think there's plenty of upside ahead, and really the quality of the companies matter when evaluating equities in the uranium sector.
We're here with Jesse Day, one of the conference's moderators. Welcome, Jesse.
Thank you. I'm very happy to be here.
Touching on metals, where are you bullish in the commodities market?
So right now, uranium is probably my main focus and has been for most of the time that I've been investing. I think that although we have to keep in mind that uranium's been in a bull run since 2020, I think there's plenty of upside ahead, and really the quality of the companies matter when evaluating equities in the uranium sector. So you have to be able to, there's a small handful of companies compared to the gold sector, for example. So you have to be able to separate the wheat from the chaff to determine where the real value lies. But I think there's so much opportunity, even still in the big developer or the big producers like Cameco, and moving down to the developers who are getting close to bringing production online. I think that's kind of where the sweet spot lies right now in the sector. But just the fundamentals are completely insane. The supply deficit is extraordinary, and we need more uranium. And at the moment, we're having all sorts of problems in the sector. We've seen the two big giants, Cameco in the Athabasca Basin in Canada and Kazatomprom in Kazakhstan. Kazatomprom is the world's largest producer, traditionally producing a third of the world's uranium on an annual basis. They are facing production issues. They are cutting production guidance. They have shortages of sulfuric acid, which is needed for their ISR operations, and that is causing them issues, along with a whole host of other issues, that is curtailing their production. And then Cameco as well has cut production guidance, indicating that they need to potentially purchase uranium on the spot market to fulfill long-term contracts, which is not something that is you want to see. So we're seeing production get cut from the biggest producers. We're seeing developers trying to enter production facing all sorts of issues. There's a lack of personnel in the industry. We need a much higher incentive price on uranium to incentivize new production to be brought online. All of this is creating a perfect storm for uranium, in my opinion.
So you feel like if uranium was higher value, we'd be able to invest more into its production?
Yeah, that's right, because to bring new production online, you need a certain incentive price because there's a cost per pound associated with producing uranium. So the key right now is to look to those companies that have a very low all-in sustaining cost per pound. There's several of those in the Athabasca Basin who have not yet gone into production but are ramping up. I would look to NextGen and Denison Mines as the next two companies in that region to start producing. Both of them have very favorable all-in sustaining costs. They have very good net present value as well as internal rate of return. So those are companies that if everything goes smoothly and it feels like it's potentially headed in that direction, we might see some delays. Canada's a very notoriously difficult regulatory environment to deal with, so that's kind of one of the only hurdles I see. But at the end of the day, I think that's a region where investors should be focused and watch the space. I mean, if you know the uranium story and you want to get exposure to the sector, but you don't want to take a lot of the single company risk, then you can look to buying the physical metal itself through the Sprott Physical Uranium Trust, or the URNM ETF, which you can buy a basket of miners heavily weighted to the big producers. So I think, but in answer to your question, I think we need a much higher uranium price to be able to incentivize enough production to meet ever-growing demand.
To sustain what's going on.
Exactly.
So you've been a moderator on some of the main stage actually this morning. What are some of your key takeaways from that?
Well, we talked about uranium, so you've heard all my key takeaways there in the first panel, which was the 2026 uranium forecast. Thank you. And then we had the 2026 silver forecast as well. Silver, obviously, on an absolute tear. It's on the headlines everywhere if you're paying attention to the commodities sector. But interestingly, the mainstream media isn't really talking about it to the level they should when we consider silver, the metal, is now $114, I think, at this point in time. I haven't watched the exact price action today, but this has been an incredible parabolic run. I think some caution is warranted in terms of a potential correction on the other side. I think the long-term trajectory of the silver market is very favorable. In terms of supply, it's a similar story to uranium. We're entering our 6th year of silver supply deficits, according to the Silver Institute. The other piece of this puzzle is the fact that there is almost no primary silver mines. The vast majority of silver comes as a byproduct of other metals, copper, zinc, lead, gold, and some others. And so it's very difficult to ramp up production in the face of the supply deficit. You can't just say, okay, if you're a copper mine, primary copper mine, you're not going to suddenly ramp up copper production to get the byproduct of silver. Same goes for lead, zinc, etc. So it's very difficult to bring the needed supply online, which makes me believe we're going to see more of this supply crunch and a higher price ultimately for silver.
Okay, interesting. And copper is apparently at a shortage as well.
Yes.
Just
So
hearing that.
yeah, copper is another metal where the outlook looks very bullish. We hit all-time highs fairly recently, and I think there's a lot of upside to go there. The difficulty with copper is bringing a mine into production from exploration to production is an incredibly long process.
Right.
It's incredibly capital intensive, and there just isn't enough mines right now producing copper to meet the growing demand in the future. Now, one caveat I will make is a lot of the projections for needed copper were based on the electrification of everything, the growth of renewable energy, and that story is starting to fall apart, in my opinion, to some extent. However, copper is needed for all electrification, and as we see the rise of a new middle class in emerging nations, developing economies, those people are demanding a higher standard of living that we enjoy here in the West. That means air conditioning, that means personal computers, that means automobiles, and all of that means a whole lot of copper. So I'm also bullish on that space.
Which of the rare metals do you have the most positive outlook for 2026? Or the next 5 years even?
Yeah, I would say uranium. In that case, we've already seen gold and silver run very far, and I believe we're going to see continued upside in both. And who knows, things could shock investors. We could see a continued parabolic rise in silver. We could see gold go much, much higher. But I just think that supply-demand story for uranium is so unbelievably strong, as well as the whole embracing of nuclear energy by both sides of the political aisle.
Right.
I just think that the uranium story is incredibly strong, and the broad market hasn't caught on yet. Your average retail investor wouldn't even know what you're talking about if you told them about uranium. So I think we're a very, very long ways away from the top of this bull market, so my answer is uranium.